Welcome back to our channel, where we will be diving deep into the terminologies that are essential to help you get ready for your financial certification exams like investment funds and Canadian securities. Whether you're gearing up to tackle your exams head-on or just looking to boost your financial vocabulary, you're in the right place. Don't forget to hit that subscribe button and ring the notification bell, so you never miss an update from us. As always, remember to like, comment, and share your thoughts. Now, let's begin. ICE NGX Canada. ICE NGX Canada is a natural gas exchange based in Calgary, Alberta. It specializes in offering electronic trading, central counterparty clearing, and data services to the North American natural gas and electricity markets. The exchange plays a key role in facilitating transactions and providing market-related services in the energy sector, particularly in the trading of natural gas and electricity. Incentive fee. An incentive fee is a performance-based fee paid to the fund manager. Typically calculated after deducting management fees and expenses, it is based on the fund's performance rather than the gross return earned by the manager. In simpler terms, it is a reward for the manager's ability to generate positive returns for the fund, aligning their interests with the success of the investment. Income splitting. Income splitting is a tax planning strategy where the spouse with higher earnings transfers income to the spouse with lower earnings. The goal is to reduce the overall taxable income of the household. It's a way of optimizing tax liabilities by distributing income in a manner that takes advantage of lower tax brackets or other favorable tax treatment for the lower earning spouse. Income Tax Act, ITA. The Income Tax Act, ITA, is the legislation governing the process and collection of federal taxes in Canada. It is administered by the Canada Revenue Agency and serves as the legal framework for the imposition, calculation, and collection of income taxes. Income trusts. Income trusts are a specific type of investment trust that holds investments in the operating assets of a company. The income generated from these operating assets flows through to the trust, and this income is then distributed to the trust unit holders. In simpler terms, income trusts allow investors to receive a share of the income generated by the underlying assets held by the trust. Index. An index is a measure of the market that is determined by a basket of securities. Examples include the SAND/TSX Composite Index or the SAND 500. Investors and fund managers use stock indices to assess the overall direction and performance of the market, providing a snapshot of how a specific group of stocks or assets is performing. Index fund. An index fund is designed to replicate the performance of a broad market index, such as the SAND/TSX Composite Index or the FTSE Canada Universe Bond Index. These funds aim to mirror the overall performance of the chosen index and are often categorized based on the type of asset class they seek to replicate. In essence, index funds provide investors with a straightforward way to gain exposure to the broader market's performance. Index-linked notes. Index-linked notes are hybrid investment products that blend the safety of a deposit instrument with the growth potential of an equity investment. They have become popular, especially among conservative investors seeking capital safety but desiring yields higher than those offered by traditional interest-bearing instruments like GICs or term deposits. These notes typically provide a balance between security and the potential for increased returns. Indexing. Indexing is a portfolio management style that involves acquiring and maintaining a portfolio of securities that closely or precisely mirrors the composition of a benchmark index. This strategy aims to replicate the performance of the chosen index, providing investors with a passive investment approach. Instead of actively selecting individual securities, indexing seeks to track the overall movements and returns of a specific market index. Individual Variable Insurance Contract, IVIC. The term Individual Variable Insurance Contract, IVIC, is used in the IVIC guidelines to refer to a segregated fund contract. Inflation. Inflation is a sustained and generalized trend characterized by an increase in overall prices within an economy over time. This is usually measured using the Consumer Price Index, CPI. Inflation rate. The inflation rate is the percentage change in prices over a specific period, often measured using indices such as the Consumer Price Index, CPI. Inflation rate risk. Inflation rate risk refers to the risk that the value of financial assets and the purchasing power of income may decrease due to the impact of inflation on the real returns generated by those financial assets. Information circular. An information circular is a document sent to shareholders along with a proxy, containing details about matters to be discussed and voted on during a shareholders' meeting. Initial public offering, IPO. An initial public offering, IPO, is the first-time issuance of securities to the public for investment. IPOs must comply with stringent government regulations governing the sale of investments to the public. Initial sales charge. The initial sales charge, also known as an acquisition fee or front-end load, is a commission paid to the financial advisor at the time the policy is purchased. In-kind exchange. In-kind exchange refers to the process where a basket of stocks is exchanged for ETF units instead of cash. This mechanism is often used in the creation and redemption of ETF units to maintain the fund's alignment with its underlying index. Insider. Insiders include all directors and senior officers of a corporation, as well as individuals who may have access to non-public or inside information about the company. Additionally, anyone holding more than 10% of the voting shares in a corporation is considered an insider. Trading on non-public information is prohibited for insiders to maintain fairness and prevent market manipulation. Insider report. An insider report is a monthly submission to securities commissions detailing all transactions in a company's shares by individuals classified as insiders. This report provides transparency and helps regulatory authorities monitor trading activities to ensure compliance with rules and regulations related to insider trading. Insider trading. Insider trading involves buying or selling a security based on material information that is not yet public. This practice is illegal as it gives individuals with access to non-public information an unfair advantage in the market. Regulators actively monitor and enforce rules to prevent insider trading and maintain a level playing field for all investors. Installment debentures. Installment debentures are bonds or debentures where a set amount of principal matures each year. This structure allows for a gradual repayment of the debt over the life of the bond. Investors receive periodic payments as portions of the principal come due. This type of debenture can provide a predictable cash flow to bondholders and is structured to align with the issuer's ability to make scheduled payments. Installment receipts. Installment receipts are a form of new stock issue where buyers commit to paying the issue price through a series of specified installment payments instead of a single lump sum. This structure allows investors to spread the cost of purchasing shares over time. Installment receipts are also referred to as partially paid shares, reflecting the gradual payment nature of the investment. Institutional client. Institutional clients are typically organizations that manage large pools of funds on behalf of their stakeholders or members. They play a significant role in financial markets due to the scale of their investments. Whether it's a mutual fund diversifying investments or a pension fund securing retirement assets, these entities have a considerable impact on the financial landscape. Institutional firm. An institutional firm is an investment dealer that exclusively serves institutional clients. These firms focus on providing financial services tailored to the unique needs and requirements of institutional investors, such as pension funds, mutual funds, and corporate treasuries. Their services often include executing large trades, managing portfolios, and offering specialized financial advice to meet the sophisticated demands of institutional clients. Institutional investor. Institutional investors are organizations, like pension and mutual fund companies, that engage in trading large quantities of shares or significant dollar amounts. These investors typically manage substantial funds and have a consistent flow of money available for investment. They play a crucial role in financial markets, influencing trading volumes and contributing to market liquidity. Institutional salesperson. An institutional salesperson primarily functions as a relationship manager, acting as the intermediary between the institutional dealer and the client. In this role, they focus on building and maintaining strong connections with institutional clients, understanding their needs, and facilitating the execution of financial transactions. The institutional salesperson plays a crucial part in ensuring effective communication and collaboration between the investment firm and its institutional clientele. Institutional trader. An institutional trader's primary responsibility is to execute orders, either on behalf of clients as an agency trader or on behalf of the dealer as a liability trader. They play a key role in ensuring timely and efficient execution of trades, adhering to market regulations, and managing the risks associated with trading activities. Insurable interest. Insurable interest means having a financial or other benefit from the life or health of another person. It's a fundamental concept in insurance, ensuring that individuals have a valid reason to insure someone's life or health, preventing speculative or morally questionable practices. For example, a family member, business partner, or creditor might have an insurable interest in an individual, justifying the need for insurance coverage. Intangible asset. An intangible asset is something of value that a company owns, but it doesn't have a physical presence. Examples include goodwill, patents, franchises, and copyrights. These assets contribute to a company's overall value and can be important in its financial success, even though you can't touch or see them in the same way as physical assets. Integrated firm. An integrated firm in the financial industry is an investment dealer that provides a comprehensive range of products and services, covering all aspects of the industry. This includes full participation in both the institutional and retail markets. This integrated approach allows the firm to serve a diverse range of clients and meet various financial needs across different market segments. Interdealer broker. An interdealer broker functions as a financial intermediary between investment dealers, facilitating transactions between them. This type of broker plays a role in connecting different market participants, helping them execute trades and transactions within the financial markets. Interest. Interest is the amount of money charged by a lender to a borrower for the use of borrowed funds. It serves as compensation to the lender for the risk and opportunity cost associated with lending money. The interest rate is typically expressed as a percentage of the principal amount and is a key factor in various financial transactions, including loans, bonds, and savings accounts. As we wrap up this session, we're thrilled to have embarked on this journey together, exploring the foundational terminologies crucial for acing your financial certification exams, including investment funds and Canadian securities. If you found our insights valuable, remember to show your support with a thumbs up and extend the knowledge to your fellow learners. We trust that these insights will prove indispensable on your road to success. Stay tuned for more enriching content, and remember, your financial expertise is just a click away.